Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Hantech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. Now, the price of oil has been one of the key factors that have been really impacting on sentiment in recent weeks, and that took a really big hit to the downside in terms of equity markets last week, as there was just starting to get the realms of the fact that maybe it wasn't just the oversupply of oil in the market, the overproduction, maybe it was also the declining demand as well. And that sort of double whammy certainly saw investors running to safety. They invested in safe haven assets, such as certainly the yen and also US Treasuries, but also they flew away from equity markets, and that had a big impact on the equity markets, that the big bull run that we've seen in recent weeks. So big corrections in the equity markets, but where is this going to fall? You could see the price of oil starting to have an impact where if there's a support and a low in the price of oil, then equity markets could start to rise again. We've already seen that a little bit on Monday morning with the oil price finding a bit of support and equity markets having a bit of a rally. So I think if we can see a bit of a floor in this price of oil, we may have the beginnings of a bit of a Santa Claus rally potentially in towards the end of the year. Also, what we've got to look forward to this week is the FOMC. This is probably the key event that we need to be we need to highlight this week, because the FOMC could well be changing their wording on their statement. The term considerable time has been on the statement for a long time now, and it sort of suggests that the FOMC has been happy to maintain rates at record low levels for the conceivable future. Now, the removal of the term considerable time would then sort of just put them another step down the road in terms of tightening, and it should conceivably therefore give the dollar a bit of support and also have knock-on impacts across other markets as well. So that's what we're looking out for this week, this change of wording in the FOMC statement. Also this week we've got the flash manufacturing PMI data across the board. We've got the from Japan and China, and those are the two countries that I think could set off sentiment on Tuesday morning. Now that change, any sort of decline in those manufacturing PMIs could have a big impact on market sentiment again. So we'll be watching out for that. But certainly those on Tuesday, it could be a bit of a volatile day. So how are these FX markets looking then? Well, we're going to move on to how euro dollar is looking. And euro dollar has been forming support around that 23.57 mark, and $1.2357, and sort of trading in a bit of a range between 123.57 and up towards 125. Now that consolidation has actually changed the outlook, I think, certainly in the near term, because up until recently the euro dollar had been a sell into strength, and now the breakdown of that big downtrend has meant that euro dollar is no longer looking so bearish, and it could well be that it could be the FOMC which changes the perspective once again on euro dollar, but I think it's waiting for a bit of a catalyst. In terms of cable for sterling dollar, I think a similar sort of story actually, but we haven't actually broken the downtrend, and we've still got the selling into strength outlook intact on cable, and it still looks to be fairly solid. But I think if this sideways consolidation goes on for much longer, then again the downtrends will start to break down and the outlook will change to being more neutral again. Dollar yen is another forex pair which has had a change of outlook. It's broken a big uptrend, and it's now actually threatening a big top pattern. That top pattern comes in as a support at 117.22, and that is the key low. That is a key reaction low within the uptrend, and if that is broken, that would complete a top pattern. Again, I think the FOMC could have a big impact on this chart this week. So I think these FX markets are sort of moving towards Wednesday being the big change day potentially, and the big day that traders take a view. Okay, so what about the indices? Well, the indices have been under significant downside pressure in the last week. As I said, this oil price slide has continued to drag prices lower, and I think that once again, if there is a support in the price of oil, then these indices might also find support. But what we've seen is the S&P 500 4% down now from the 2079 high back towards 2000 again. Now I've been waiting for a correction in the S&P 500 for a while, and it's now happened. And now we could see this this band of support between 1980 and 2010 to be tested, and it'll be very interesting to see how the S&P 500 reacts to this correction. In terms of the DAX, similar sort of story. It came to an all-time high and has now corrected over 4% back towards the pivot level support around about 9,600. So again, it will be interesting to see how the support reacts to this big correction. FTSE 100 has been a big laggard, continues to be a big laggard. It's actually down over 6% since these highs, since the reaction high 6773, and it's now testing support around 6,300. I'm not entirely happy about how FTSE 100 is performing, considering I'm a UK trader, but still I think that the support comes in at 6,300, and will be interesting to see if that holds, because if it doesn't, then there's not a great deal holding it back until the October lows again. Okay, what about the gold price? Well, gold has been just consolidating recently in the last week or so. It's sort of hit the key downtrend resistance. Now that came in around about that 1238, 1240 mark. But again, it's interesting because there's a lot of different outlooks going on the different time horizons. The very near-term outlook is corrective to the downside. The near to medium-term outlook is positive from the lows to the high within that big downtrend channel, but that big downtrend channel is the massive overriding signal on this chart, and it still suggests that rallies are a chance to sell on gold, and it would need to have a break of the resistance at 1255 to really suggest that the gold price is turning around on a medium to longer term basis. Okay, so where are we looking at for the calendar this week? Well, as I said, there's a lot of economic indicators that could have an impact across sentiment through the week. We're going to start off Monday afternoon. We've got the US industrial production number and the capacity utilization. Capacity utilization is looked at by the Fed, and the Fed will be just monitoring if that capacity utilization continues to rise. That would suggest that the output gap in the US economy is not all that large anymore, and it could be close to being inflationary. So that could be a tightening signal and a hawkish signal. On Tuesday, we've got the UK CPI. Inflation always has an impact on sterling, so watch out for that in the morning. You've got the German ZEW economic sentiment. Again, that will have an impact on the euro. German data has been big for the euro recently in terms of volatility. And then also on Tuesday, we've got all these manufacturing PMIs, which could have an impact on sentiment across the board. Wednesday, we've got the US CPI. Again, that would be dollar-related plays across the board, and also the FOMC. So a lot of volatility potentially on Wednesday as well. And then it starts to quieten down a little bit on Thursday when we've got the German EFO, and then Friday we've got the BOJ monetary policy. So a lot actually to be packed into the final week before Christmas. But I wish you good luck in your trading, whatever you're going to be doing, because there's a lot going on, and I will speak to you again next week. Thank you very much.